What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. The weekend is here. And more importantly, so is the FAANG Stock Recap Show, where every Friday we recap all the major news and the technical analysis from all the major FAANG stocks, including Microsoft, Tesla, Netflix, Meta platforms, Apple, Amazon, and more. We kick things off like we always do with Meta platforms, otherwise known as Facebook. Start of the week closer to $169, slipped to under $160 per share. And I'll tell you, if in the technical segments, I ended up buying the dip on Meta as they slipped 3.4%. This article as of today, as it slashes engineering hiring and it is turning up the heat on its cost-cutting measures and its employees. Meta Platform CEO and founder Mark Zuckerberg says this is, quote, one of the worst downturns we've seen, in reference to the economy. He later went on to say is realistically, there are probably a bunch of people in this company who shouldn't be here. Some of you might decide this isn't the place for you and that self-selection is okay by me. I tell you what, Mark, let's get a little less passive-aggressive and just fire these people you think that shouldn't be there. Take the Elon Musk route and just start slashing. I actually respect this to a certain degree. I think he could be a little less passive aggressive and just fire the employees that he thinks shouldn't be there. But I like what Meta is doing. They're starting to rein things in. Now, it doesn't change my outlook for this company from a revenue, from a profit, from any of the fundamental perspective. But I like that these tech companies, especially Facebook, are starting to rein things in on that cost side, starting to rein things in on these employees. They work for you. Make them do the job that you think they should be doing. Now, Facebook's parent Meta is prepping for a fierce second half headwinds. It's related to the first story that I showed you. This company is just bearing down. So you can expect when this company reports earnings in about 3 weeks' time, I tell you what, things are probably not going to be that great on that earnings call. The fact that they're prepping this with their employees, prepping it with these types of press releases and this type of news flow, probably not going to be a good thing. But look, you're starting to look out. If you're buying Meta now, if you've been holding it for a while, you're starting to look out 18 months, 24 months down into the road. And that's what analysts are starting to do with their short form video Reels product that is seen to be likely to pass TikTok in terms of kind of usage in just about 18 months. If that happens, I tell you what, Meta Platforms probably is a buy, not necessarily at the current price, but probably a buy. Now, this is the other reason why I probably, and kind of a spoiler alert, I did buy the dip on Meta Platforms, is because the FCC commissioner urges Google and Apple to drop TikTok. The number one competitor right now for Facebook is trying to hold on to its position in the app stores as it comes under siege from the United States government again. We obviously saw this under the former administration, under former President Trump. Towards the tail end of his presidency, he was trying to get TikTok essentially sold off to, I think, Oracle and maybe even Walmart, and even Microsoft was involved in that bidding. I tell you what, if TikTok gets removed from the App Store, as the FCC commissioner suggests, that is incredibly bullish for Meta. We'll look at the technical segment here in a moment with Meta, but the technicals are starting to line up a little bit. And I tell you what, if the number one competitor can get kicked out of the marketplace, that is incredibly bullish for Meta going forward, at least in the shorter to midterms. Now, moving on to Apple. Started the week at 142, slid down like most of these stocks, closer to about 139. This is after Apple raised their iPhone 13 price nearly 20% in Japan as the yen plunges. We'll see Apple probably do. We'll see a lot of companies do this as you have currencies under pressure with the macro environment that we're in. We'll see if these price increases really hurt sales, hurt demand on the products. Certainly something to monitor over the next 12 to 24 months. Apple to push drivers to use CarPlay to buy gas straight from the dashboard of your car. Now, this is kind of an interesting story. So apparently you're going to be able to pull up to a gas station, and instead of paying at the pump, you pay on your dashboard, maybe eliminating obviously the need to whip out your credit card, your debit card, and those types of things. Those credentials could be saved inside the dashboard, and you could do maybe a couple of taps and start filling up your car. I actually think this is a push more into what Apple is going to do with their own car. Now, the rumors on the, aforementioned or rumored Apple car has been slowing down over the last couple of months, but I tell you what, these types of features could make it more interesting for Apple to integrate these types of softwares into their own car, and they test it out in terms of their CarPlay situation. We'll see what materializes there, but interesting rumor there. Now, Chinese demand for Apple's iPhone 14 is stronger than Apple iPhone 13. Now, here's the deal. We're on Apple 13 right now. The Apple 14 is not scheduled to release for another couple of months. And so this is essentially survey data, but it's interesting that if already consumers are kind of lining up and waiting for this Apple iPhone 14, obviously can be bullish for Apple in the long run. And look, in a recession, are people really going to give up upgrading their phone, a device that they use all the time? Some people, hours and hours a day spent on their phone. Are they really going to give that up? Especially, I don't know what the situation is in China when you're buying these, if there's carrier subsidies like you have here in the United States. I don't see the demand diminishing here in the United States as long as you can upgrade these things for a small charge on your AT&T or Verizon bill. We'll see, obviously, that materialize over the next couple of months. Now, Apple may keep using Qualcomm modem chips. This is after potentially failing at its own. We talked about this, I think this was late last year, that Apple was going to try to make their own modem chips. They're obviously moved into their own silicon chips to power their laptops and computers. In fact, all of Apple's devices have their own proprietary chips inside powering those computers. They want to now go to their own modem chips in their phone. They obviously tried to pull this off over the last year. Doesn't look like that's going to happen. That surged Qualcomm, at least temporarily. Qualcomm surged on the news that Apple will likely have to use their modem chips at least for another cycle of the iPhone. Moving on to Amazon, started the week at 115, slid down closer to about 109 on Amazon. This is on the heels. We're about 10 days away from Amazon Prime Day, and that's expected to be another retail sales blockbuster. And I think in the economic times that we're in, I said this on last week's show, I'll repeat myself, Prime Day is July 12th through the 13th in an era of inflation where you have higher gas prices, higher prices across the board. I think at the very least, consumers will be going to Amazon and looking at the Prime Day deals as the allure of lower prices, not higher prices. Lower prices could lure people, at least from a looking perspective, on that site. Now, Amazon nears a deal for UK coverage of soccer's champion leagues. This is obviously on the heels we talked about the last week, or maybe the week before, where Apple had secured the MLS soccer rights for 10 years. And I got a lot of comments in the section, and maybe I didn't explain myself well enough. These league rights are not to make money. I'll repeat, these league rights, when Amazon buys these league rights, it's not to make money. When CBS buys the rights to the Super Bowl, it's not to make money on the Super Bowl. It's to advertise all the sitcoms that they will air after the Super Bowl. And after that big event, essentially allows them to advertise what shows they have airing on CBS or Fox or NBC. It's been the same story for decades. The same thing with Amazon paying a rumored $1.7 billion for championship leagues. This is to get people to sign up for Amazon Prime. This is to get people to shop on Amazon.com. This is to get new cloud computing partners for AWS. This is not to make money. This is, you've got to spend this. And the only companies in the coming years that are going to be able to afford these multi-billion-dollar sports rights are the tech companies that we're coming here on the channel. Now, also related to that, the NFL Sunday ticket rights. This is obviously the exclusive rights to show out-of-market NFL games. For the last at least a decade, AT&T's DirecTV has held those rights. Those rights are going to be moved on to a new bidder, and supposedly Disney, Apple, and Amazon are the three bidders of that. And the NFL is now meeting with the executives, meeting with the owners of the leagues, and deciding what they want to do. And I actually think if they wanted to go with Disney and Disney was the highest bid, they would have already announced this. The fact that they're kind of still mulling things over actually makes sense that Apple and Amazon probably have the stronger bids. And the league is just deciding, do they want to go a completely different direction? Because going with Disney would be the safe bet for the NFL. Disney already has kind of the brand brand recognition with ESPN. A lot of their customers are already familiar with that product. Obviously, going with Apple and Amazon would be a completely different product and a completely different experience for the vast majority of their consumers, especially Apple, which I don't think has ever shown an NFL game on one of their proprietary platforms, whereas Amazon at least have some Thursday night rights to show a game. So there's going to be some consumers that are comfortable logging into Prime and watching an NFL game. This, again, is going to be billions. We're talking about tens of billions of dollars to get these rights after the start of the next upcoming NFL season. And again, this is not to make money. This is for Apple to get people to buy their phones, their tablets, their Apple TV Plus subscriptions. For Amazon, exact same thing. Amazon Prime subscriptions, shopping through Amazon, getting new clients and customers for AWS. Moving on to Netflix, started the week at $188, slid down a little bit, down to about $180 per share. Netflix needs better content, but at the same time, expectations are too low for the upcoming fiscal year of 2023. This is according to Lightshed Partners. Now, broadly about content, I think one thing that we need to understand is during 2020 and probably parts of 2021, it was probably hard to produce content and make content with all the restrictions from travel and all those types of things that were involved. So actually, I think it's normal that we have a little bit of lull in content, and we'll see how Netflix is able to respond to that. If they have strong content in 2023, 2024, I think that will be incredibly bullish for Netflix. Now, Netflix is facing more ad urgency in improving second half, according to JP Morgan. Obviously, we've been covering Netflix every week. There's a news story on their ad platform and their ad offering that is to come. Obviously, we expect some news on this in about 2 weeks when Netflix reports their earnings. Moving on to NVIDIA, started the week at 168. Oh my, is this right? This stock was down 14% this week. I definitely stepped in here and bought a little bit more of NVIDIA. And when you go down 14% in a week, I tell you what, if you can't buy a 14% dip, you ain't going to buy a 40% dip. Now, this is on the heels of Senate Minority Leader Mitch McConnell. He's looking to block that $52 billion in chip funding over other spending packages. We talked about this on last week's show. Again, we have a worldwide audience here on the Investor Channel, and certainly the FAANG Stock Recap Show has the broadest audience that we have. And the thing to understand about United States politics, and those of you that are from the United States know full well what's going on here in Washington, is if they put this $52 billion in CHIPS Act funding, this would be one of the few spending bills that if they put it up, just a clean bill, here it is, it would get broad support. I mean, there would probably be very few people on both sides of the aisle that would not vote for this. And so that turns it into a political bargaining chip from a fundraising perspective. And then in Mitch McConnell's perspective, he's taking this bill hostage. So the other side of the aisle decides not to do certain things. My guess is Mitch McConnell will try to hold this $52 billion worth of funding bill over until after the elections in November, so he and his party, which are perceived, again, it's just perceived here in the United States, perception is not always reality when it comes to the actual results of an election, but it's the perception that Mitch McConnell will maybe go from Senate Minority Leader back to Senate Majority Leader, and guess what he's going to do with the $52 billion chip funding bill, which would just likely pass very easily, especially if he had control of it. Well, he's going to bloat this with things that he wants. He's going to tack things onto bill that he wants, and that's just the game that Washington plays. Moving on to Google, started the week closer to $2,350, ended the week down big, about 7.5%, down to $2,175 per share. This is after Google settles a Google Play Store monopoly case with a $90 million fund for developers. This is a similar type case to Apple's App Store, where they're doing a 30% tax on every transaction through the store. Google's facing those same types of pressures. They settled here. It looks like they're going to keep service fees at about 15% for your first $1 million in annual revenue for at least a couple of more years. That'll put a little bit of pressure on revenues and probably margins, but all things being considered, Google has a pretty diversified business. Now, Pinterest CEO changeover indicates e-commerce shift. I put this in here because, first of all, Google's Bill Ready has moved on from Google and is now the CEO of Pinterest. And I tell you what, what? In a perfect world, in a world where you don't have a lot of regulation coming from Washington, D.C. in terms of mergers and acquisitions, in a perfect world, Google would just swallow up Pinterest, and I think that would actually be a great combination of the two. But instead, we have an executive over at Google moving over to Pinterest. I'm also relatively bullish on Pinterest based on where the valuation's pulled into. Also, when we look at the fundamentals, I haven't bought that stock yet because look, you have all these great stocks pulling back. I don't need to go into the garbage bin and go invest in Pinterest, but I think at some point I might take a stab at that stock. Now, moving on to Microsoft, start the week at 266, end of the week closer to about 260. Microsoft, I think, has slipped into their quiet period as they report earnings in about 3 weeks' time. Not a lot of news out of Microsoft this week. Moving on to Tesla, the volatile play of the week. Start of the week at $744 per share, end of the week closer to $680 per share. That's an over 8% decline over at Tesla. This is as we await their delivery numbers for Q2. We should see them sometime, maybe Friday. Sometimes when I record this FAANG stock recap show at the end of the month, Tesla reports it after. Sometimes you get it in the weekend, Saturday or Sunday. We'll see what happens as that Shanghai factory was kind of start and stopped. We did a number of stories on that here on the channel. And obviously, Tesla is also ramping up their German facilities and also their Texas facilities. We'd expect a number sometime in the next 48 hours from Tesla in terms of Q2 deliveries that will give us a very, very good insight into what the earnings are going to be for Tesla in a couple weeks when they report, because we'll know exactly how many vehicles they will have delivered during that quarter. And we know the mix of those vehicles to a certain degree. We know there's a small amount of Model S and Model X, and the vast majority are Model Ys and Model 3s. And we know about the gross margins. Analysts will be projecting out once those numbers come in. Now, Tesla estimates are getting trimmed at Citi as Wall Street continues to temper their targets. So we're seeing expectations pull in on Tesla. Number one, from supply chain. Number two, from the shutdowns over in China. None of it yet has to do with demand. If you try to go out and buy a Tesla, if you try to go out and reserve one, it's incredibly difficult. You're going to wait 6, 9, 12 months, depending on what part of the country you're in. I tell you what, if you're out here in California, they tend to deliver them a little quickly. If you're far away from the Fremont factory, far away from the Texas factory, chances are you're going to wait over a year to get that car. So as long as we still see demand for Tesla's products, I'm still pretty bullish, even though in the shorter term, from a technical perspective, stock might break down. Now, speaking of the technical segment of the show, here we are. We kick things off with the S&P 500. We're basically right here in the smack dab, kind of in the middle of the range. Okay, we're still in this downward trend. We're kind of hovering right here in the middle. Could we go back down next week? Could we rally to the top of the range? We'll see what stocks decide to do. But again, another week where we're just kind of waiting for these stocks to do something different from a technical perspective. Until then, we'd assume that these downward trends are going to continue. Some people have been commenting on my channel, I'm too bearish, I'm too this. Guys, look at this technical pattern. Until this changes, the story is just going to be the same here and on any credible analysis that you see here on YouTube or anywhere. We're in a downtrend, and we're in a downtrend until things turn differently. Now, moving on to Meta from a technical perspective, I did step in here and buy this one. I was lucky enough to get it south of $160 per share. The reason why I stepped in on Meta today, first of all, we're at the bottom of this range. Historically, this has been a pretty good time to buy this stock. I am going to put a trailing stop on this. I'm going to let this run up. My assumption as we move into earnings season with these stocks, Meta reports their earnings on July 27th. Again, about 25, 26 days from now. I would expect this stock to continue to work its way up. I will probably take profits on this one. If you want to call me a trader, if you want to call me not an investor, whatever, I don't care. I like making money. When this stock has been down at the bottom of this range, you buy it, and when it moves towards the top, that's when you decide to sell it and take profits. That's what you want to do in the shorter term. Moving on to Apple, this one is just really kind of basing out at kind of this level of support here at about $140 per share. This stock has just kind of been hovering right there. There's a couple areas of convergence. First of all, I'm going to take this volume profile on here because it doesn't really matter right now, but we've got this longer term uptrend, which has really been intact since the lows of 2019, and it's converging right here. Okay. You also have another area of support here at about 140. It's kind of acting as support and resistance at the same time. I would expect this area to hold with Apple. Wouldn't surprise me, quite frankly, as we move into Apple's earnings, which we expect on July 28th. If this stock just kind of hangs out in this area, if not kind of walks its way up to the kind of the top of the range and then decides what it wants to do once we see clarity on those earnings. Moving on to Amazon, still just sitting on top of a box of sideways consolidation, okay? With Amazon, we have a box of sideways consolidation between about $80 and $100 per share. We're sitting right on top of that. It's my belief that we'll eventually probably pierce through this and duck into this area of consolidation. I think that can be a good buying opportunity. We're waiting on July 28th with earnings for Amazon as well. My guess is this stock just kind of hangs out in this range. It's actually traded in a pretty tight range for over a month now, between about $100 and $125 per share. I know that's like a 25% swing, but that's where Amazon is from a technical pattern. And until it kind of breaks well above that or below that, we assume it will just stay in that range. Now, speaking of staying in a range, Netflix, we've got to zoom in here on Netflix, stretch our chart out here. Now, we talked about last week the fact that we've got earnings for Netflix coming before the rest of these FAANG stocks. In fact, we're just 18 days away. On July 19th, we should have earnings from Netflix. Wouldn't surprise me if this one just wants to kind of base up here at the top of the range and then wait how these earnings come. Wait till we get color commentary on the ads. Wait till we get commentary on the subscription, any price increases, how the rest of the world is turning out with Netflix. And I tell you what, you get positive momentum on this one. You could pop it to the upside. Up to over $200 per share would really technically break you out of this downtrend. That would be really interesting for the rest of FAANG. And in the same sense, you could get some bearish notes out of the subscriber count, maybe the slowdown in terms of their revenues, in terms of that ad product that is perceived to be coming out with Netflix, and maybe you break down to the bottom of the channel. We'll see what happens with Netflix. I wouldn't touch this one. It's essentially at the top of the range, whereas there's multiple other FAANG stocks that are at the bottom of the range. I think, quite frankly, maybe a little bit better buying opportunity if you need to buy right now. Now, speaking of a buying opportunity, NVIDIA continues to pull back into our box here. I did buy today. I can't remember the price, probably around this $144, $145 range. And like I said at the top, the stock is down 14% a week. If you can't buy a 14% drawdown, guess what? You're not going to buy another 30% drawdown in this one. And with NVIDIA and all of these stocks, we're just nibbling at the top because it's my belief with NVIDIA, you're probably going to come down towards the bottom of the range, which will take you south of 120. But again, if you can't buy the dip at 140, there's no way you're going to be able to do it at 120, especially aggressively. I'll be more aggressive towards the bottom of the range. It'll be more of a risk, but I think there'll be more reward if NVIDIA does bottom out in that range. Moving on to Google, this one actually is setting up the most interesting. Look what we're making right here with Google, and we haven't seen this with almost all of these FAANG stocks, okay? We made a low back here in May, down here south of about right around $2,000 per share. We made a higher low back in June at about $2,115 per share. And look, today, we made another higher low back in July. So month after month, we're making a little bit higher lows. You'd like to see this hold. You'd like to see going into next week, Google pops to the upside, maybe retest these highs. Now, what we're also doing with Google is we're kind of making higher highs. It's not super clear. It's not a real steep uptrend here on the higher highs, but this is starting to look interesting. This is starting to look like buyers are stepping in. Now, does that mean that the downside is over with Google? No, absolutely not. We've got earnings on July 25th. That's just 24 days from now on Google. Something bad there, bad outlook, bad guidance, bad profits, bad anything, and it could push us down into this range. I think Google gets south of $2,000 per share. That could be a buying opportunity. But folks, this is what you're starting to look for. Those of you that are kind of newer to technical analysis, you're kind of wondering, what do I look for in a stock bottoming? This isn't a bottoming formation, but you're starting to make higher lows. You're looking for follow through next week. You need this stock to get above, I would say, about $23, almost $2,400 per share. That would be rather encouraging. On the bear case, the other thing that you're looking for is just to dump out the bottom. Okay, we made higher lows, but all of a sudden the buyers just dry up, and then you dump out the bottom. If we get any dump out the bottom move, this goes for Meta, this goes for Apple, this goes for Amazon, quite frankly, probably Netflix as well, certainly NVIDIA. You get any dump out the bottom of the channel, okay? Same thing with the freaking S&P 500. 500, okay? You get a dump out the bottom of this channel, just a washout sale down to the bottom of a channel, like way outside of our deviation, what we've been making, the pattern that we've just been consistently making for 6 months this year. You get any deviation out the bottom, in my opinion, that is a strong buying opportunity. Not necessarily that day, maybe not the next day. Some of you have these 3-day rules or whatever rules you kind of want to make, but you get a dump out the bottom. In my opinion, that starts signaling that stocks are starting to get very oversold, or at the very least, pricing in a lot of bad news. Now, moving on to Microsoft, a little interesting. This one's actually kind of in the middle of the range. Looks a little bit like the S&P 500. We're kind of essentially smack dab in the middle of the range. Microsoft can't decide if it wants to go back to the top of the range, which quite frankly, if you want to sell up there, that's fine. Goes back down to the bottom of its range, I think can be a buying opportunity for Microsoft. Moving on to Tesla, looks a little bit like Google, folks. We are starting to make a little bit of higher lows down here at the bottom. Again, this is on an extremely short time frame, so it's not technically a bottoming pattern, but you see here with Tesla, we made some lows back here in May, south of about $625 per share. Made some other lows here, very close to $625, but closer to about $650 back in June. And now here we are sitting in July. Again, we're on the precipice of those Q2 delivery numbers coming in for Tesla. That will allow analysts to kind of back into some earnings and some revenue numbers, and we'll get more clarity heading into next week where Tesla shares. You get a dump out the bottom on Tesla. I think you could easily retest 600. I tell you what, you break through 600 on Tesla, and oh my gosh, you're probably like 350, 375 easily in play. Maybe as soon as 2 weeks from now. Who knows? You get some strong delivery numbers. You get some strong analyst estimates and those types of things. I think you could still, quite frankly, come back. Maybe not necessarily to the top of this range, but at least halfway through. That would take you back up to about $850 per share. Tesla reports their earnings 24 days from now on July 25th. We'll certainly be here every Friday covering it from a FAANG Stock Recap show. We'll obviously cover these earnings. I think what I'm going to do, since these earnings are so pivotal, not only for these stocks, but for the broader markets as well, I will do earnings preview videos for all of these stocks in the coming weeks. Let you know what the revenue is supposed to be like, what the expectations are, what the possible upside is, and what the possible downside is. We'll also look at it from a technical perspective. So look forward to those videos in the coming weeks. We'll do it for all these FAANG stocks that we cover so regularly here on Friday. Thank you so much for tuning in this week. There will be no weekend show. I'm still on vacation, but I'll be back next week as we move into earnings season this July. Thank you so much for all your support. Have a great and safe weekend. We'll see you again next Friday. Good luck with your investments.